continental Europe is starting to come together and think, obviously in reaction to a lot of the geopolitical events and how it can spend on infrastructure and defense and other things. Rent growth in a lot of our portfolio is picking up. Yields are stabilizing. The building blocks of stability are the first step to expansion. And it does feel like we're there at this moment. There's some parts of the valuation story that I think there's a bid-ask spread that the market always seems to do early in the recovery cycle. And that has to get unlocked to be able to really pick up momentum. But I think one thing that we've seen in the market is transaction volumes are actually quite high on a historical basis. But we just got so spoiled during COVID that things were off the chart, that everything in comparison seems depressed. We were never going to stay at the yields that we were at that level. They just weren't simply sustainable. So it's an adjustment to the new normal, which takes a few years to kind of lean into. And we may, if I had to pick a period that it starts to feel like we're in now, it's about 2014, 2015, maybe heading towards, that pre-COVID level.
Yeah. That
was not a bad vintage to invest into, assuming you didn't rely on yield compression. It's a more of a stock pickers market. Pick the right locations, pick quality. The one theme that we're seeing is definitely a separation between grade A quality and something that may be more obsolete. So the era of just buying large portfolios and assuming you create a premium through that, it may come back again, but it doesn't seem like it's in the near term.
So it's kind of first principles, back to basics in terms of kind of quality, stock, location, with a kind of robust capital stack, and just making sure you're not just solely reliant on yield compression, but driving rents forward, having really strong kind of asset management, development management capabilities to really improve and drive outperformance and mitigate risks is really what's gonna.
It's old school. It's actually kind of exciting to think about. These are the ways that you stick to your vital thinking on not development but everything. I think what everyone is waiting for is a little bit more liquidity to come in the market, certainly in the core space and elsewhere, so that if you develop, there's a core takeout. There just in certain pockets of the risk profile, there's less depth. I think that's what we're waiting for.
And have you seen a change in capital makeup looking to access the European market from various different geographies, or more kind of private capital versus institutional capital? Can you talk to that?
Yeah, over the last 10 years, capital has become much more global and institutional in the sectors that we deal with. I'd say in the last year, Europe has started to at least think about investing more within Europe. And again, that's a natural reaction to some of the global phenomenon. Seeing that really kind of lead to new commitments is happening in real time. And the capital has become more mature and more institutional in nature. We've definitely seen that. They're asking better questions. I think that what we're seeing in data centers and credit, they look at the whole spectrum of what they can invest into. And, with change to the office investment market and other things, they've had to rethink their strategies, and, they're pretty astute.
How